It may not be the next housing crisis, but it could be a hiccup for many who borrowed against their homes during the housing boom. Many only paid interest for the first 10 years, but starting this year, they'll have to start paying off the principal as well, leading to a huge jump in monthly payments. For example, a homeowner with a $40,000 loan balance and a $200,000 mortgage at 4% would see an increase of $300 per month. Jack Otter is editor of Barron's.com. Jack, good to see you again. Does this mean a rash of defaults?
I don't think so. First of all, home prices are rising again. And if you're lucky enough to have a house that's worth more than the mortgage, you have options. You can refinance or you can just sell, and that gets rid of the problem. For people who are underwater, though, they are even more likely to have one of these loans, and there are fewer options. They can try for a loan modification. They might be able to refinance, but it's doubtful, but they can get a little forbearance from their bank. Or finally, they might be forced into a short sale, which means they have to sell the house for less than they owe.
But you don't think this will be a full-blown crisis because the numbers just aren't big enough, and in part because we learned from the last crisis.
Well, that's true. Before, we didn't know what to do. Now, finally, banks are actually reaching out to homeowners, helping them solve the problem. So we kind of have a template for dealing with loan modifications. I think also it's helpful the fact that this is simply not happening anymore. We learned that lesson. And finally, homeowners, I think, understand your house is not an ATM.
Jack Otter, thank you very much.
Certainly.